Good afternoon, everybody. I'm John Colucci. I'm Vice President of Sales and Marketing with Westchester Modular Homes, and I'm here today with Paul Scalzo and Joe Enright of Westchester Modular Homes of Fairfield County, one of our model home builders over here in the wonderful state of Connecticut, and they also service Massachusetts. So welcome, guys.
Thank you,
Thanks for having
John.
us.
Absolutely. Today we wanted to chat a little bit about what's going on with financing. We hear about interest rates going up and what the Fed's doing and how it's affected the market. So we have Tom Coronado, who is with the Federal Savings Bank, and Tom is known as one of the professionals in our modular world that deals with financing all the time. Tom's been in the business for quite some time, so Tom, we're happy to have you join us today, and we just wanted to chat with you a little bit about what's going on. What's happening with customers? What's happening with rates? What's happening with applications? What are you seeing out in the marketplace?
Well, thanks for having me. Hope to kind of provide you guys some insight. I mean, it's definitely a changing market. It's been changing for months. It's definitely changed over the last year. I think they are seeing a decline in application volume in the regular purchase market. Some of that has to do with inventory and, again, being more in a national spotlight that I'm in. I kind of have my finger on the pulse in various areas. So it's not a global thing. It's kind of more of like a local, way of weighing things. But, I think reading the data that's out there from the NAHB and other sources, we're seeing that construction is still strong. It's still the alternative. I think people have come to accept that rates are no longer 2 and 3%, but they're 6 and 7%. They may continue to increase for a little while. But the folks that are kind of out there are, you have to kind of come to the realization that you're going to marry the house and date the rate. And, that's where my job comes into play to kind of go over the mathematics today and say, hey, this is your payment. But then if we do see a refinance boom when rates decline and they are cyclical, then we look at here's where your rate will be at X, Y, or Z rate when it declines, and refinancing is not a complicated process.
Got it. So, one of the things, obviously, since the pandemic we've run into is obviously the cost of building homes today, not just from the factory's perspective, but, Paul and Joe are faced with rising costs and rising material, rising labor cost on site, doing the site work and the finish work on the units. And now we're kind of trumped by having the higher interest rate. So, the first thing we do when we talk to a client is advise them to call somebody like yourself to be pre-qualified and understand what their budgets are. So when a customer reaches out to you, what steps do you take them through on the finance end?
Well, again, in my world, certainly for system-built homes, what we kind of do is at least get them familiar with the terminologies that are different from a standard stick-built, site-built home. My particular kind of approach is kind of ask the probing questions, kind of get them familiar with the mathematical gymnastics of the loan, which technically is going to be the same no matter what, whether they're purchasing existing or they're going to be building. The math is the same. So there's no really magic wand in new construction or existing, but try to get them just focused with the builder, and really just get them to the point of, what do I do next? And I usually recommend like a full-blown pre-approval, have the ability to do a soft credit pull so it doesn't really affect their credit score, and get them just, even if they know they're qualified, well, let's have the blank kind of blessed with a pre-approval of the math. So that this way they can go back to the builder, back to the site folks, back to the manufacturer and say, yes, I'm ready to kind of really negotiate because I know the bank piece is behind it. And then, kind of further let them know, like, from that point, they kind of conduct the dance. Because the next piece is sign a contract, execute it, get plans, inspection, architectural drawings, have the builder do a site visit maybe to make sure that their excavation costs are where they're going to be, or if it's a tear down or whatever it might be, but really kind of explain to them. And then, additionally, a lot of folks think that they could just go to any bank, any lender, and it's not the case. As we know, some manufacturers, some parts of these, homes that are system built, or modular, there's kind of requirements for each factory or manufacturer as far as how the curbside delivery is handled. Is there an assignment of funds letter? When are we paying? Are we paying pre-curbside? What kind of deposits need to go out? When they need to go out? In the last 3 months of my kind of searching for, kind of test driving different, kind of arenas in the banking world, finding out that some of the banks out there don't even control their own draws, which means that the builder experience isn't going to be good. When the builder experience isn't good, then the borrower experience isn't good. And ultimately that means the manufacturing piece isn't good. Even though it's a great kind of transaction, they just kind of feel that it was laborious, and they may recommend to their friends not to build. So we kind of have to get them comfortable that this is not a regular purchase, although it may feel that way, because there's a complexity to the loan process that we kind of partner in with the builder and manufacturer to kind of make it smoother.
Right. Got it. So great advice, because obviously, the old adage, money makes the world go round, right? So we got to make sure that the customer can afford the house, afford the financing rather, to build a new home. So that's really great advice for a great starting point to have them not just pre-qualified, but actually get into the loan process. Tell us a little bit about your program when it comes to modular.
So in my world for modular, a lot of things have changed. The Federal Savings Bank has kind of embraced building as one of their core principles and mission. Statements like first-time home buyer and veterans are kind of very near and dear to the company. But kind of number 3, I think they gave me 4, to be honest with you. And number 3 was construction, which kind of got my attention. And I think I stopped listening, so I don't know what number 4 is. But they'll allow for VA construction loans, FHA, so you got a lot of first-time opportunity. They'll allow for first and second home builds. So again, you get the move-up buyer. You've got the legacy home builders. They even recognize that there's opportunity in that 1 to 4 unit multifamily. They really kind of embrace the more expedient build and the efficient building of system built. So modular is that, right? I mean, you have less hands in the pie. You have a controlled build in a factory. You don't have weather-related issues. You've got the energy efficiencies and things of that nature. But they've also expanded into renovation. So when it's a tear down, or if it's a fire, affected home, or if it's a rebuild, they're really going into kind of attacking everything, including ADUs, which is something I didn't have a chance to ever talk about in the past. But again, if it's common to the area, ultimately that's what they're looking for, is the appraiser to comment and say, look, is this a white elephant in the middle of the woods, or is this actually something that's common to certain markets? And again, I'm the unicorn that's out there in the modular space, and a lot of folks are saying, I didn't even know loan officers or banks were looking for this type, but this is the future of building, because as we know, the ultimate issue with all industries is labor. And the manufacturer, you guys are figuring out how to solve that by having it done in one location, and again, kind of coupling with the bank. So it's been very, very good to work with these guys to kind of look at, and they're constantly kind of looking for what space are they missing in construction. So like USDA or land loans and things like that, they're kind of looking at, and they even have some commercial options, although to be honest with you, I haven't quite got it done. It's not my forte. So, but
I'm going to jump in. I think it's great that you understand what we do as authorized builder for the factory. Time in and time again, we're training banks, and a lot of the banks can't do the construction draws the way they needed. We're experiencing that right now. You had all the buzzwords that we deal with, assignment of funds and things like that protect the factory when they're building a home. So it's nice to hear you say all these things. Unfortunately, sometimes what happens is people have relationships with banks and they want to do business with their lender, which is fine. We always will do that with them, but we wind up having issues, which we do. We have issues daily with some of the banks because we have to train them. They don't know what an assignment funds are. They've never done one. They don't know about the factory being an ESOP and when the house has to be paid for and things like that. So I'm just glad to hear you say all those things, Tom. You know exactly what's going on. And to your point of factory-built modular homes, it seems to me every stick builder that I talk to is trying to buy from our factory because we complete our houses, we don't start them, and then wind up having things that are back ordered and not finished. So we're getting the houses done on time. Factory doesn't start till they have all the product in-house, and we're very efficient with that. So anyhow, that's what I think of what you're saying.
Yeah, I mean, and again, a lot of the factories went through the growth issue of COVID, right? I mean, we all had supply line issues. So, a lot of the factories in the beginning, I guess we kind of all got caught with our pants down a little bit where, even the banks didn't know how long will these loans last and be on the books. But, I think the resolution and the solving of the COVID was, wait to get all the materials, then start building a house so we don't have things sitting in the yard. My understanding from talking to several banks and bankers is a lot of the COVID delays are kind of gone, and the draw process to the builder has been more efficient because everything's moving again. There was a lull of it was just logjam, and and again for the bank, for the manufacturer, for the site guys, and I think that's why housing starts were kind of up year over year according to the NAHB. So at least for July,
There is one positive point that we have is we don't have labor inflation at the factory. So some of the stick builders, when they go to get their product finally delivered and installed, are finding they have labor inflation, not so much material inflation. And it's huge right now what's going on, at least in our area. We're out of New York, 60 miles out of New York, we're seeing labor inflation, significantly.
Yeah, and that labor inflation is really coming from the fact that there's not a whole lot of labor out there. So, it's the old supply and demand theory, but, we're fortunate enough in the factory to have a built-in labor force, and a lot of that I attribute to us being an ESOP. When you're employee-owned, we don't have the turnover that you would normally have somewhere else, and we can control the cost.
So I had a question. Obviously we deal with 90 to almost 100% of our loans are construction loans. But what's happening now is a lot of our clients are coming to us, and with the costs going up or whatever they are, they're kind of short. They're basically cash buyers, but now they're short. So it almost seems it seems to be a lot to go through a construction mortgage to come up with 20% of the build or something like that. So do you have programs that would work for us as a builder and for the client that is basically like an end loan that's guaranteed and lined up that can be in place? We do the project, we get a CO, and it closes and we're funded? Or is that something that we still would have to do a construction mortgage with?
So, generally speaking, that is kind of the pre-qualification conversation that I have with folks. So whether they need money or not, the short answer is there's tons of opportunity. My particular bank has, unsecured loans up to $50,000 for qualified buyers, where they can just flat out lend the money for cost overruns, or I could use it as kind of like a line of credit, or I could use it for anything. And it's still a little shocking to me at times when I kind of look at some of the product suite that's out there. But in the general world, and again, depending if I'm answering everything correctly, you can write a loan with a longer commitment. Again, if the clients only need $100,000, you can kind of just get them pre-qualified so there's a takeout. We could wring the risk out of the loan by, kind of clearing all the conditions so that, if you're going to kind of the final mode, that there is a competitive loan prepared for these folks. Some cases there's extended lock periods where, I've seen, banks or, bankers or, where they can lock for 180 days or 360 days and kind of guarantee the rate against a increasing rate market. If they have departure residences, there's home equity lines of credit that you can kind of do. There's bridge loans. And this is all stuff that's out there. And kind of identifying that in the beginning, we want to take, or I want to take, path of least resistance with the client because, if they have a departure residence with a ton of equity, sometimes the cash out refinance to get them the cash to make them a cash buyer for you is the best thing.
So the timing wise, is the timing about the same for construction mortgage or something like you're talking about? Because if it is, then why even go down that road? But if it's definitely a lot faster, a lot, easier process, that's kind of the question.
I mean,
So
loans close in 30 to 60 days. We can get out there and close something in 10 to 15 days, but who wants to advertise that?
Yep.
Construction loans are more complex.
Mm-hmm.
So it's about customer experience. And you don't want to get them lost in the sauce because either the loan officer or the bank or someone's kind of confusing the situation. These folks come to us in the modular world, and as you guys had said, the banks don't understand modular to begin with, and they confuse us with other types of building quite frequently, which is not the case. Modular is just a method of construction, and as opposed to manufactured, which is a type of construction. So you kind of have to get out there and get in front of it and say, okay, what is going to be the best path? I mean, some of the clients we have is we know based on the economy, they're cash heavy. So maybe they don't get a bank loan at all. I'm in a business to get bank loans, but I'm in a business to solve my friends or my relationships problems, which is how do we get a build going? And if they're sitting on $1 million with another company, if they could take a line or a loan against that, maybe that's the quick and dirty, easy answer, that they take a loan against assets. They don't even deal with the construction piece. And I just line them up for, once we talk to their financial planner, how do you want to structure the permanent loan once you've made the move? So you kind of have to have that kind of comfortability because the relationship, although it's with the client, it's also with the builder, and everything leads to referrals, right? So if we're giving them the right information up front, then we're giving them the right expectation of the process. And then when you build it, if the process is as we described, then they refer us again. So it doesn't always mean that I have to win the loan, but I have to win the relationships that are around the loan.
So it is a complicated process. And listen, my advice to any customer that's looking for this, if you're looking to build a new home, hopefully with modular, that Tom, we've got your information up on our screen with your contact information now. Feel free to give Tom a call. And again, we recommend that you speak to a bank before you get too deep into the process to understand exactly what the financing looks like, what kind of cash you might need to come up with up front, and what your comfort level is for that payment on a monthly basis. And that kind of sets the stage for budgeting the construction of the house and the kind of house and the options that you're looking for in the house, including the site work. Tom, we appreciate you joining us today.
Thank you, Tom.
Tom, thanks a million. Yeah. And folks, again, we're giving you that resource, Tom Coronado, a specialist in the modular financing world, and we hope you'll take advantage. Thanks for joining today.